Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Tunayo benki inayotufaa sisi wateja na wafanyikazi, tuko pamoja, lengo letu moja, kuyaboresha maisha ya watu, kujitolea kwa huduma bora, kuendelea kwa uaminifu, kuhudumia wote kwa furaha. Equity benki inayotujali. Benki yako, benki yako, benki yetu ni Equity. Ni benki ya watu wote, ni benki inayotujali. Huduma kwa jamii yetu, unaendeleza barani kwetu, mashikano ya furaha, maendeleo unayoyaleta. Benki yako, benki yako, benki yetu ni Equity. Ni benki ya watu wote, ni benki inayotujali. Tunainuka kwa uwezo wake, Muumba wetu tunamshukuru, kwa ufanisi anatujalia, barani mwetu twasonga mbele. Benki yako, benki yako, benki yetu ni Equity. Ni benki ya watu wote, ni benki
Board of Directors, management, staff of Equity Group, Holdings, ladies and gentlemen, I welcome you to the 19th Annual General Meeting of Equity Group Holdings, PLC. My name is Professor Isaac Macharia, the Chairman of Equity Group Holdings, PLC, Board of Directors, and I wish you all a joyous Eid ul-Adha Mubarak. I will now ask Bishop Dr. Charles Kariuki to start us off with a word of prayer. Bishop Kariuki.
Thank you, Chairman. Shall we pray? Everlasting Father, our Creator, we want to thank you this morning as we bow before thy throne of grace. We bless you so dearly for the gift of life and also for the gift of a wonderful day. As we gather together this morning for Equity Group Holdings PLC 19th Annual General Meeting, how we pray that you start with us, stretch your blessing hand, and give us a wonderful meeting. We bless you for all the shareholders, and we thank you from wherever they are joining. How we pray that the proceedings of this meeting shall be blessed by you. We commit this annual general meeting unto your able hands. As you start with us, take us through as we end with your blessings. For this is our prayer in Jesus' name. Amen. Thank you, Chairman.
Thank you, Bishop Kariuki. Shareholders, today I'm joined by your directors and other officers of the company, some physically and others virtually. Allow me to introduce those who are present here with me in this live stream. I'll start with Dr. James Mwangi, Group Managing Director and CEO, who is on my immediate left. Mrs. Mary Wangari Wamai, Group Executive Director, on the extreme left. Mr. Samuel Kirube, Group Chief Operating Officer, on my extreme right. Mr. Brent Marai, Group Chief Strategy Officer, and Ms. Lydia Dilango, Group Company Secretary. The representative of our external auditors, PricewaterhouseCoopers, Ms. Bernice Kemashia. The representative of our corporate lawyers, ALN Kenya, Mrs. Rosa Duati. Our sign language interpreter, Ms. Elizabeth Wangari. Shareholders, we also have other members of the board who are attending this meeting virtually. I will proceed to introduce them as well. Ms. Evelyn Lutongeda, Non-Executive Vice Chairperson. Dr. Edward Odudo, Non-Executive Director. Dr. Helen Gichohi, Non-Executive Director. Mr. Vijay Gidmo, Non-Executive Director. Mr. Jonas Mushosho, Non-Executive Director. Dr. Evanson Vaya, Non-Executive Director. Esteemed shareholders, I will now call upon the Company Secretary to report on the registration and confirmation of shareholders and to confirm the presence of a quorum or otherwise.
Thank you, Chairman. The quorum for the annual general meeting is a third of the issued shares. I confirm that a total number of 7,454 shareholders holding a total of 2,287,921 and 834 shares, representing 61% of the shareholding, are attending this electronic AGM. I therefore confirm that we do have a quorum for this meeting.
Having confirmed that we have a quorum present, I declare the meeting to be properly convened and duly constituted. I now call upon the Company Secretary to read the highlights of the notice and agenda convening the meeting.
Chairman, I confirm that the notice and the agenda of the meeting, as outlined on pages 263 to 266 of the Integrated Annual Report, was published in the daily newspaper, the Daily Nation, and the Standard on 6 June 2023. Additionally, the notice was published and is on the company's website even up to today. Chairman, I will take the notice as read, having been circulated on time. Thank you.
Ladies and gentlemen, we will now commence the formal business of today's meeting. Shareholders, the 2022 annual report and audited financial statements were made available to all shareholders through a publication in the local dailies, and the full report was made available on the company's website as indicated in the notice convening this meeting, which was published on the 6th of June 2023. Shareholders, my report to you for the year ended 31st December 2022 is contained in the integrated report on pages 23 to 25. I shall take the report as read. The integrated report remains accessible on the company's website. I encourage all shareholders to read the detailed statement for information. I will only give a few highlights of my statement. I am delighted to note that in the year 2022, Equity Group weathered a turbulent macroeconomic environment to register a significant growth with total assets reaching 1.537.7 billion and 8% growth in profit after tax to Kenya shillings 446.1 billion. This strong growth speaks to the group's embedded social and trust capital that has seen the group's brand rated the 4th strongest financial brand on earth. At the close of 2021, the global economy appeared to be on the path to recovery. However, vulnerabilities in global economic systems exacerbated by the pandemic and the Russia-Ukraine war resulted in an economic downturn, placing the world at risk of recession amidst inflationary pressures. Global growth slowed down significantly, marking the weakest growth since 2001. This global context also affected the region we operate in, with marked increase in the cost of living, currency depreciation, and higher interest rates. But despite these challenges, Equity has proven its resilience, agility, and ability to thrive in different operating environments. By providing relevant and innovative products and services, engaging our stakeholders proactively, and embracing new ways of working, we have continued to create value for our customers and stakeholders. Our purpose of transforming lives, giving dignity and expanding opportunities for wealth creation remains at the core of our existence and has served as a clear rallying point for our aspirations and the aspirations of our customers, stakeholders, strategic partners, and investors. We have anchored our business on this purpose, supporting the day-to-day lives of our customers and offering both commercial and social value. Despite a decline in disposable incomes, we have seen growth in customer numbers and deposits, demonstrating the confidence our customers have in the Equity brand. Our subsidiaries, such as Equity Bank Kenya, Equity BCDC, Equity Bank Rwanda, and Equity Bank Tanzania, have made strong strides, and we remain committed to Southern Sudan and Uganda, where we have seen significant market share growth. As an inclusive and integrated African financial services provider, we believe that the continent is ready for transformational change. We envision a continent that leverages primary sector opportunities, promotes trade and investments, and supports the growth of micro, small, and medium business in a green, clean, and technology-enabled environment. Our ambitious strategy, the Africa Recovery and Resilience Plan, ARRP, focuses on Africa's potential to catalyze sustainable economic growth. We aim to grow our customer base to 100 million by 2030, extend credit to 5 million businesses, and create 25 million direct and 25 million indirect jobs. By supporting primary producers, adopting suitable technology, and partnering with governments, investors, and global partners, we can unlock Africa's economic and social potential. The Board of Directors has been dedicated to overseeing the actualization of the ARRP. We have strengthened our governance practices, established 2 new board committees, the Information Technology and Innovation Committee and the Sustainability Committee, to provide leadership in technology-driven interventions and environmental, social, and governance aspects. These committees will ensure that we align our operations and offerings with ESG considerations and deliver enhanced accessibility and convenience for our customers. Equity's social agent, the Equity Group Foundation, EGF, works in tandem with our commercial arm to provide opportunities and to create shared value for our stakeholders. Our programs in education, health, agriculture, enterprise development, energy, environment, social protection, and innovation continue to grow and create impact across the countries we operate in. Looking ahead, the financial services sector will continue to experience dynamic change and adopt disruptive technologies. Our market contexts are highly competitive, with both banking and non-banking entities contending for significant market share, with our newly established insurance subsidiary showing great promise. And it is crucial for us to remain true to our purpose, deliver impact, and compete effectively. The capabilities we have invested in, our strong brand, and relevant propositions position us well to deliver on our strategic focus areas and the ARRP. We are making deliberate and systematic strides towards our objectives, and we anticipate increased momentum in achieving our ambitions. On this note, I'm delighted to announce that Equity Group Holdings PLC, in keeping with this strategic regional expansion, intends to acquire Compagnie Générale du Banque, or Cogebanque PLC, in Rwanda after signing a binding term sheet that will mean that upon completion of the transaction, EGH will pay an aggregate cash consideration of Rwandese francs 54.68 billion, equivalent to US dollars 48.1 million, for a 91.93 controlling equity stake. The acquisition of the 5th largest bank and subsequent amalgamation of the business with that of Equity Group's existing banking subsidiary in Rwanda will position Equity Bank as the 2nd largest bank in Rwanda after the merger, with a total combined asset market share of 18% and a deposits market share of 19%, based on audited accounts as at that 1st December 2022. The transaction would solidify Equity Group's systemic status in the region, specifically in Rwanda, Equity Bank Kenya, and Equity BCDC, as banks with the 2nd largest market share in their respective markets. I would like to express our gratitude to the strong and visionary leadership that has contributed to Equity Group's success. We appreciate the collaboration of our stakeholders, including our staff, customers, investors, regulators, partners, and the communities we serve. Without their support, we would not have achieved the impact we have today. On behalf of the entire board, I would like to extend our heartfelt gratitude to Director Evelyn Rutagwenda for her outstanding service to the board and our organization as a whole. As Evelyn embarks on her well-deserved retirement from the board, we want to express our deepest appreciation for her unwavering commitment, dedication, and invaluable contribution over the years. Her remarkable leadership, strategic vision, and exceptional insights have been instrumental in shaping our collective success. While we bid farewell to her role as a board member, we are thrilled to note that Evelyn will continue to serve as a valued member of the board of our Tanzanian subsidiary. We are confident that her wealth of experience and expertise will continue to enhance our operations and drive our company's growth. Evelyn's retirement marks the end of an era, and we wish her the very best in all her future endeavors. We would also like to appreciate our management and staff who have shown exemplary dedication. Our boards have provided invaluable insight and counsel, and our regulators have supported us with compliance and governance. Our partners and financiers have been instrumental in our growth, and we remain grateful to all those who support the work which the Equity Building Society, which became the Equity Bank, which became Equity Group Holdings, has achieved over the almost 40 years of our existence in support of the empowerment and transformation of the African people. Shareholders, I now invite the Managing Director and CEO of the company, Dr. James Mwangi, to introduce the management team and to brief the shareholders on the year under review and the future prospects of the company. Dr. James Mwangi.
Thank you, Chairman. Thank you very much, Chairman. Ladies and gentlemen, welcome to our 19th AGM. The Group Executive Management team is highlighted on page 35 of the Integrated Annual Report, but for the sake of putting faces to the names, maybe I will ask the camera to point to where they are seated. And on the other side, so they are all present with us today. Esteemed shareholders, allow me also to recognize Naval Sood, or the presence of Naval Sood, who is an investment advisor to the board. Shareholders, my report to you for the year ended 31st December 2022 is contained in the integrated report on pages 27 to 30. I shall take the report as read. The integrated report remains accessible on the company's website. And now, shareholders, I will proceed with my presentation, which speaks broadly and give depth to the chairman's statement. My presentation will cover the operating environment, the financial performance of the group, the 2023 outlook, the proposed dividend payout, a presentation on the employee share ownership program, proposed restructuring of the group, more details on what the chairman has spoken to on acquisition of Kojabank, and more on the equity group foundation or the social aging of the group. Turning to the operating environment in 2022, the macro environment has witnessed increases in interest rates in response to accelerating inflation, consequently slowing economic growth. The Fed US interest rates have now reached 5.25, rising from below 0.25 in just a span of a year. And that has been in response to the inflationary trends, which has peaked at 10% in the Eurozone, in the UK, and the US, and the sharp interest rates has started causing turmoil in the financial sector, as witnessed in the substantial mark to unrealized losses on bank board holding, and which we have seen the implication in terms of instability in the financial market. Locally, we see the same trends in inflation, and as a result, interest rates movement as governments try to contain those interest rates. Kenya has gone through successfully in an inventive way the elections 2022, though confronted by drought conditions that has undermined agricultural production, placing an upward pressure on food prices and increasing the inflation. We have witnessed in the region DRC increased mining production stronger than expected, which has led to strengthening of growth to 6.6% in 2022 with an improving position. We can talk of the same for Rwanda, Tanzania, South Sudan, the markets that we have operations in. Broadly, 2022 has been a continuation of 7 years of navigating challenges. 2016 to 2019, we were coping with the impact of interest capping in Kenya. 2020 to 2022, the years of COVID-19 pandemic leading to global lockdown, restrictions in global trade, and of course, significant disruptions in supply chains. 2022 to date, Ukraine invasion by Russia causing commodity price rises, particularly grains, fertilizer, and gas as a result of the broken supply chain as a result of war. And we saw the implication of these in terms of price rise and heightened geopolitical tensions, particularly between China and the West. 2022 ushered a new era of low global interest rates coming to an end, and almost going back to a 4 decades era where high inflation rates were witnessed. In Kenya, risk-based pricing has been approved by the central bank, allowing us to mitigate the challenges of inflation. So broadly, shareholders, investors, the group has been managing has been managed under a sustained VUCA environment. A lot of volatility, a lot of uncertainty, a lot of complexity, and a lot of ambiguity in the environment. As a result, we have enhanced our human capital because our ability to manage a VUCA environment is dependent on the skills, the experience, the exposure of our leadership, And the objective is then to have management proactively involved in supporting, advising, guiding the subsidiaries, and mitigating and managing the risk, and aligning strategy and execution with closer interaction between the CEO and the corporate office. So broadly, we have seen the creation of risk buffers during the period because of the sustained 7 years of challenging environment, of a VUCA environment. Liquidity has been sustained at high levels to allow flexibility to the group. Capital buffers have been maintained at a level of almost 20% against a regulatory requirement of 14.5, so that we can backstop the risk with capital buffers. Risk management has been heightened significantly, and particularly buffers in terms of quality of asset, focusing on the credit risk management and ensuring sufficient provisions are maintained. Credit risk guarantees are obtained to ensure the risk is well managed and fairly mitigated. The group has also focused in regional expansion, and we have witnessed robust performance in 2022, as the chairman said, partly as a function of diversification. And for the first time, we have seen regional subsidiaries contributing nearly % of the group performance, and contributing also nearly 50% of the balance sheet or assets of the group. We witness improved performance in the diversified businesses, making and enhancing resilience of the business in a challenging environment. And the diversification in the region with the return on equity fairly distributed in 7 countries, or 5 countries, and the 6th one being a regional representation office. Diversification of the business has helped, and we have seen greater integration and holistic offering with the bringing on board of Equity Life Insurance. The first year of operations have shown strong performance with a market position that we are proud to have achieved in 1 year, but more importantly, winning the recognition and respect of the market in terms of recognition in awards as Group Life Company of the Year 2022, Group Life Innovation Award 2022, Group Life Best Loss Ratio Award 2022, and Group Life Best Practice Award 2022. And this is what boosted our confidence to seek the license of a general insurance so that we can continue to widen and the offering and making it more holistic and integrated. These efforts have resulted into improved performance. Despite tightening policy environment, the group was able to maintain very, very robust performance. As of Q1 2023, all subsidiaries generated a return on equity above the cost of capital, significantly reflecting the resilience that has been built by the measures that the management has focused on. And for the shareholders at the group level, we see the return on equity catching up at the group level, improvement, and 2022 improving slightly on the performance of 2021. And that once again reflects the resilience that we have built. We are confident that the resilience that we have built will continue to strengthen the performance of the group. We strongly believe we are well positioned going forward, and as a result, our guidance of outlook is such that we shall experience positive growth during the year. We see the first quarter 2023 actual performance validating the guidance we had given for 2023. With its deposit growth, it's at 23 against a guidance of 20 to 25. Loan growth at 21% against guidance of 25 to 30%. And to the shareholders, a return of 27.5 on equity against a guidance of 25 to 30%. So we can see the resilience helping us to manage the VUCA environment, the volatility, the uncertainty that is deeply rooted into the environment, an environment that to a great extent we may not have control over because it's the external environment, but confident that the buffers we have built will help us to manage and mitigate the impact of external shocks. Most important maybe is to note that subsidiaries' contribution for the first quarter stood at 45%, matching the guidance that we had given, and are confident that the subsidiaries who in the past have shown very robust balance sheet growth are now showing very robust performance in terms of profitability, and by first quarter of 2023 matching and exceeding the contribution that we had targeted of 30 to 35 by registering 45%. And this gives us the management the confidence to recommend to the board to consider an improvement in the dividend payout because of the positive outlook. And this is with the intent of supporting our shareholders and our investors to also use the dividend cash payout to manage, to mitigate, and sustain themselves during these challenging times. So the dividend payout was as a result of earnings per share improving by 15% from 10.4 shillings per share to 11.9 shillings per share, and giving us the confidence that we can increase the dividend payout by 33% from 3 shillings to 4 shillings, bringing the dividend payout to be in line with the dividend payout policy of paying 30 to 50% of the available for distribution. Shareholders, investors, there are two presentations that are aligned to issues that may be brought to your attention and to your decision in terms of voting. The first one is on the employee share ownership scheme. And as shareholders, you might have noticed from the presentation of management, we have significantly strengthened the management. The group is now of a size of approximately $13 billion US. It's by balance sheet size, by profitability, a leading company in East and Central African region, and have joined the ranks of multinational companies with its base as the East African region. As a result of all these consideration of becoming a global company, shareholders, investors. It has been the considered decision of the board and executive management that we continue to strengthen the management bench with experienced, exposed, and globalized people with the skills and competencies to manage the group, the complexity of the group in a very volatile environment, or in a VUCA environment. And as a result, it has cost us to get staff from global companies that are of the size and the experience and complexity that we have entered into. This kind of management are exposed and are retained through complex employee payment programs that are comprehensive and are intended to reward talent, retain talent, and drive performance while containing cost. And in preparing ourselves to align to best global practices of attracting, retaining, and developing talent, we have proposed to the board, which have accepted and has proposed to put the request to the shareholders for the establishment of an employee share ownership program simply called ESOP. This program involves rewarding and retaining good performance while containing cost. It involves a three-tiered reward system, a guaranteed monthly pay, an annual bonus, and a share ownership scheme that takes a view of 3 to 5 years retention. The Equity Group Board and Management are looking to implement this robust performance-based variable pay structure for the organization. By being variable, it means that we are not stuck with the fixed cost. The cost of staff will be aligned to the performance of the organization and consequently can drive performance. The variable pay pool in any given year we capped so that the total staff cost to the company comprising of fixed pay, benefits, and variable pay should never exceed 15% of the adjusted gross revenue. Then that revenue is adjusted to provisions and fraud, which don't bring in attributable cost of doing business. An individual employee variable pay in any particular year will be based on a combination of individual performance and their business unit results in that year, and hence motivating, inspiring performance for everybody. And the higher and better the performance, the higher the pay, and consequently the inspiration and the variable component of pay, reducing the guarantees the fixed cost. Variable pay awards to any employee will be limited to a maximum of 100% of the individual's annual base salary. That means the share options that will be given, the bonuses that will be given is limited to a maximum of the guaranteed pay, annual pay. The aggregate variable pay to staff will be paid out in form of, as we said, annual performance-based cash bonus, and an employee share ownership portion that will be issued in form of shares of Equity Group that are subject to performance vetting or vesting conditions, so that it's not really automatic. So broadly, that program, commonly known as ESOP, continues to reward, retain a good performance while containing the cost. The inclusion of long-term incentives is intended to align employees with the long-term shareholder value creation. So essentially, it's completely aligning the interests of the employees with those of the owners of the business. Variable pay would include a portion of short-term incentives in the form of cash bonuses, while the long-term incentives will be in the form of shares of equity group, which are subject to performance vetting, as we have said. The number of shares awarded will be determined in Kenya shilling portion of variable pay dividend divided by the current share price. So essentially, it is pegged to, in every respect, to performance. Employees with more ability to influence delivery of shareholder value will receive a higher portion of their variable pay in form of shares, so that they are more aligned to the shareholders. The intention is to further incentivize employees to act in ways that deliver value to shareholders. So broadly, the employee variable pay is a combination of short-term incentives and the long-term incentives. And again, the objective, as we have said, is needed to drive performance. The proposed ESOP is designed to align employees with shareholders, as we have said, and deliver long-term value. The ESOP is to enable part of the variable pay, as we have said, to be in form of shares. The number of ESOP in terms of computation in units, and we can see this from the presentation, the mathematics of doing this. And maybe Naval, I would ask maybe if we could, as an advisor to the board, take this opportunity maybe to make one or two comments before I move to the next subject. You can come, can join me.
Thank you. Good morning, everyone, and welcome to the AGM. And thank you, Dr. Mwangi, for asking me to come. As he has explained, I'm an advisor to the board, and I've been working with the company in designing this ESOP scheme for a number of months now. I think, as Dr. Mwangi has said, the principal element is to put in place a scheme that aligns the interests of employees with those of shareholders. And the brief that we were given was to design something that fits specifically to equity group's requirements. And it was very clear that we were not to design a scheme that was simply taken from some other bank that might be operating in the market. And I think that the key features of this scheme are that, firstly, it is all-inclusive. It's not a scheme that is designed just for the top executives, for example. One of the critical elements was that all employees of Equity Group should participate. They should understand what drives shareholder value. They should understand how what they do in their day-to-day work delivers that value. So very much the scheme is all-inclusive. I think the second element, as Dr. Mwangi has said, is that there is the idea that you have a variable pay pool, but not all of it is paid in the same year. So a small portion of it is paid out as cash, but the rest of it is paid out in the form of shares of Equity Group that the employee will only get after 3 years, and provided that they continue to perform over those 3 years. So if, for example, they decide to stop working hard, their individual performance goes down, or indeed the business unit's performance goes down, then whilst you may have been awarded 1,000 shares, 3 years later, the company will assess whether you have continued to perform, and consequently whether you get the full 1,000 or a smaller portion of them. So again, that hopefully helps align employee performance over the long term with delivering shareholder value. The third element is that the number of shares, as Dr. Mwangi said, depends on the share price at the point in time when the award was made. But for technical reasons, we have had to structure the scheme as an option at a price of 50 cents. The original idea was very much to simply award the shares to employees based on the share price at the point of time of award. However, it makes more sense for the company and for the employees that they are asked to buy the shares for 50 cents. The monetary value, of course, doesn't change dramatically because of the difference between the share price and that 50 and the par value, but it helps in terms of making sure that employees pay taxes at the point that they actually exercise the options. So hopefully, that has given you a perspective as to why the scheme has been put in place and what the main elements are. And we are hopeful. I'm sure that management will monitor to make sure that the scheme is achieving its objectives and to make adjustments as they go along. But this scheme is to run for 10 years. So there's a lot of time to make sure that it is achieving its objectives, and I'm confident that it will do so. So thank you very much for that, Dr. Mwangi.
Thank you very much, Naval. Always able to simplify complex things, and we deeply appreciate. So this process, as we said, is addressing the ability of the group to attract global talent. The kind of talent the group is attracting are working in multinationals where pay is structured in this form. And if we don't have this kind of structure, then we gross up their bonuses, we gross up their ESOPs, and make that a fixed cost. And that is what we are avoiding, such that the structure mirror the structure of where they are coming from, so that we don't gross the variable, what would be variable performance-driven reward into a permanent cost that doesn't drive. So essentially, this ESOP also speaks to the commitment of the group in stakeholder management with a social focus of inclusion on one hand, and on the other one of living to what we are, fair and just, simply being equity. So this ESOP program is also designed to deliver higher stakeholder value, or value for shareholders that exceeds the cost of shares granted to employees. As the chairman said, the group is becoming complex because of its growth, and we have proposed to restructure the group so that we have greater specialization, we have greater focus, so that we are very deliberate and intentional in terms of management, and we match the skills and competencies with alignment to the nature of business. So, and eventually use this capability to better risk manage and strengthen governance and oversight. So we are proposing the holding company to have 4 groups under it. The first one is the banking group as we know it, that holds the Equity Bank in Kenya, Uganda, Rwanda, Tanzania, South Sudan, and DRC. The Equity Group Foundation standalone group that the social region that covers the entire regions of operation. The insurance holding company that holds the general insurance and the life insurance in the markets that we operate. And lastly, a technology group that holds the Equitel infrastructure, the MVNO license, the PSP license of payment services provider license, and at the same time provide for IT businesses that we may have. This structure, as I just said, will ensure better risk management, the strengthening of governance, and alignment of skills and competencies to the needs of individual group of businesses, and particularly enhance oversight because of the board skills and capabilities. And lastly, shareholders, the chairman indicated of an opportunity that came after the notice that had been issued, the acquisition of Koja Bank. And this here, the objective is to increase the market share of our most efficient subsidiary. As you might have noticed when I was presenting on performance, Equity Bank Rwanda has become the most efficient subsidiary on its 12th year of operations. And essentially, then what we hope to do is to increase the size of the subsidiary by 54% and reaching an asset market share of 18% and 19% market share of deposits as per the latest audited account. And this broadly would then make Rwanda join the systemic subsidiaries that ranks among the three best or largest banks in their markets, that is Kenya, DRC, Uganda, and South Sudan. Shareholders, Koja Bank will be a cash transaction, so there would be no dilution to the shareholders. It will be bought through internally generated resources. Shareholders, allow me to add by just looking at the shared prosperity business model that continues to define our impact and to shape the brand of Equity Group, a brand that has become the fourth most strongest financial brand on earth. And we're focused on shared prosperity, focusing on education and leadership development. 55,000 scholars who have benefited from our scholarship programs, 40,000 at secondary level, 12,000 have already reached the universities, and 18,000 have already reached the universities, and we have 761 global scholars, of who 218 are in Ivy League schools, and we have 3,000 in our TVET programs. The strength of this program is in terms of performance and creating ambassadors in society, and hopefully shaping the culture of the markets that we operate in. Our focus on women and youth have seen us really de-risk and capacitate youth and women to better participation in economic activities through financial education and entrepreneurship training, which we have extended to agriculture and micro, small enterprises. We have seen great focus with medium-sized farmers now, just to ensure that we are creating ecosystems where small-scale farmers can be anchored out as outgrowers by the medium-sized farmers for sustainability and creation of value chain. So we continue to take pride in what, as a group, we've been able to maintain. Our focus on sustainability has seen us really prioritize the environment in terms of clean energy and in terms of planting trees as carbon emission mitigation mechanisms. So broadly, shareholders, Those are the issues that I thought I would bring out to your attention, areas that we have focused on, and give you assurance and confidence that while the environment is challenging, we are managing under a VUCA environment, and we expect the challenging environment to sustain for maybe 3 years. We have built through very differentiated, very unique management decisions, the buffers that would be able to absorb external shocks, while at the same time having strategy that is appropriate for the environment. And we are confident that we shall continue to register good performance. Thank you, shareholders.
Thank you, Dr. Mwangi. Shareholders, the director's report was also circulated with the integrated report, and it is contained on pages 102 to 103. With your permission, I shall take the report as read. I now call upon Ms. Bernice Kemashia of PwC, our external auditors, to read the external auditor's opinion, which is part of the external auditor's report, appearing on pages 118 to 122 of the integrated report for 2022. Ms. Kemashia.
Thank you, Mr. Chairman. Shareholders, I represent PricewaterhouseCoopers LLP, the external auditors of the company. We have completed the audit of the 2022 financial statements. We issued our opinion on the 27th of March of 2023. With your permission, shareholders, I will take the audit report in its full as read. However, I will proceed to read the opinion section of the report as is required by regulation. And the opinion reads that we have audited the accompanying financial statements of Equity Group Holdings PLC and its subsidiaries set out on pages 123 to 246, which comprise the consolidated statement of financial position at 31st of December 2022, and the consolidated statement of profit or loss, consolidated statement of other comprehensive income, consolidated statement of changes in equity, and consolidated statement of cash flows for the year then ended, together with the company statement of financial position at 31st of December 2022, and the company statements of profit or loss and other comprehensive income, changes in equity, and cash flows for the year then ended, and the notes to the financial statements, which include significant accounting policies and other explanatory information. In our opinion, shareholders, the accompanying financial statements of Equity Group Holdings PLC give a true and fair view of the financial position of the group and of the company as at 31st of December 2022, and of their financial performance and cash flows for the year then ended, in accordance with international financial reporting standards and the requirements of the Companies Act 2015. Thank you, Mr. Chairman.
Thank you, Ms. Kemashia. Shareholders, as you are all aware, shareholders were given an opportunity to ask questions and seek clarifications prior to this meeting with respect to the financial statements and the resolutions contained in the notice and agenda of this meeting. Responses were provided to shareholders who asked questions and sought clarifications prior to the AGM. The responses have been published on the company's website. Having said that, we will provide an additional opportunity to the shareholders with additional questions to ask them using the question button on your streaming device or via the mobile phone USSD code appearing on your screen. Please note that we will try as much as possible to respond, but due to time limitations, we may not address all of them. Therefore, all questions received will be collated and the responses will be published on our website after this meeting. Shareholders, let me now invite those wishing to call in with any questions to proceed and dial in. Hello?
Hello, good morning. Do you hear me?
Yes, I hear you loud and clear. Good morning and thank you for dialing in. Please.
Thank you, Chair. Thank you, Chairman. My name is Sally Korir, and first of all, happy Eid ul-Adha Mubarak.
Thank you, Sally. Go ahead and ask your question.
Yes, allow me to say this first. The most formidable, prolific, and treasured board of directors of Equity Bank, our results-oriented, tenacious, and one of its kind, super CEO Dr. James Mwangi, our agile management and motivated staff. We laud you for weathering the storm and posting impressive results, despite these economic times, where a shilling is diminishing against a dollar. We thank you so much for this, for propelling the company. Now, I will go straight to my question. Question 1, it's about technology, and more specific on artificial intelligence. Does your company plan to incorporate with AI, or how is Equity's generative artificial intelligence used in the business, and is it an opportunity or a threat? Question 2, what is your take or feel in regards to finance bill? Being a financial institution, the effects to the company, and how are you readying yourself to manage it? And then finally, what role have you done to ensure that the SMEs are struggling to bounce back? And then finally, what role does the company play in entrenching sustainability in the business going forward? Although this question has been answered already by the CEO, because the CEO is just too intelligent, there is no question that defeats him. So,
thank you,
Chairman.
Yes.
I want to laud you for propelling this company to greater heights, and it is my wish that we pray for you so that we can also continue always to stay at the top to lead others. Thank you so much.
Thank you very much, Sally. Thank you for your compliments, and thank you for those very important questions. We shall be answering all questions together, so we'll give opportunities to other shareholders to ask the questions first.
Most welcome.
Thank you. Good morning.
Good morning. My name is Daud Jones, Machakos County.
Thank you very much.
You can hear me? You can hear me?
Yes, I can hear you loud and clear. Please go ahead and ask your question.
Thank you. And I want to start by commending the entire management and your board for a well-done job for keeping our company a pay-out dividend company. That is a very big achievement. I also want to commend the entire board and the management also on the regional business which has been doing very well. For example, the DRC, which has been invested very quickly and it has grown up. We thank for that investment. We thank for that idea, which is very good. We also propose the CEO, Dr. Mwangi, to venture to Ethiopia, and we are looking forward to hear more about Ethiopia soon. Mr. Chairman, I want to say you have done well. Much of it has been done. The organization has kept us on the move. We are all the time informed, and I don't see any serious question which would arise to be asked in that meeting. We want to thank you and keep it up in the way it is, and we reach you reach the shareholders like you have been reaching the shareholders. We thank Mr. Mwangi because he's always concerned with the shareholders. Let him keep that spirit, and we appreciate that spirit. The other issue I want to say is the wings to fly. The wings to fly has been run very well, and it is spread over in the country, and we are happy to see that the CSR is doing very well. Thank you so much.
Thank you, Mr. Nzau. We shall address your question on Ethiopia shortly. Thank you.
Okay. Thank you.
Good morning.
Morning to you, Mr. Chairman. My name is Emmanuel Masaba, CBS 13443, calling from Busia County. I have 2 questions on your foreign investments. You have invested in Southern Sudan, and the other big Sudan, there's a conflict. Do you think it will affect your profitability, your future profitability? Another question is your investment somewhere. I won't mention the country, but your competitor here invested there and they lost a lot of money through fraud. So how protected is your business when you are in foreign countries? Lastly, may I thank you so much for the hard work you are doing, have paid us a dividend. Company is doing well. I thank even Image Registrars. They enable us to contact you through the phone during the AGM. Thank you.
Thank you very much, Emmanuel. We shall be answering your questions. And thank you for dialing in.
Thank you very much, Mr. Chairman.
Good morning. Good morning.
Morning.
Go ahead and thank you for calling. Please give us your name and where you are calling from, and then go ahead and ask your question.
My name's Catherine Aluda Mali. I'm calling from Nairobi, Kenya. Thank you for the opportunity to speak in this AGM. I have only one request, which goes directly to Daktari Mwangi to handle and pass it on to the board of directors of APP. I know he has a big heart which can accommodate all of us. And my request is that going into the future, can Daktari probably think of extending the company's corporate social responsibility to shareholders by giving them a reduced rate on the medical insurance cover. And this one you can do it by capping it to the individual shareholders, not to be extended to the entire family, to reduce on the cost. You know, good health to shareholders would also mean a going company, a going bank. You can work on the criteria of when how you can include those shareholders. It could be up to a particular certain year when the shareholders were shareholders. Then you give them this premium on reduced rate for only one individual shareholder, not the whole family. And I say this because I've seen some companies, in manufacturing companies, which when we are holding an AGM, they give us tokens of the products made from that company. And we really get excited. Talk of Kakuzi, they give you only 5 avocados and a small pack of macadamia. We get excited because they are from our own farm, our own company. We get the taste of our own goods. Does it mean we can't buy 5 avocados from the market?
we can buy. So if we are given a reduced rate on insurance, I think we can be excited. At the same time, this could be a motivation to shareholders. I know that the other year we extended our corporate social responsibility to COVID. We do it to the wings to fly. So why not to shareholders? Companies like Orchard, they give you a jam, a small tin of jam, and we get excited, just want to use for a week or so. Kapchorwa give us a packet of tea leaves, and we get excited. We can buy this from the shelves in the supermarket. But because it's from our own farm, we really appreciate and actually try and market our company. Thank you very much.
Thank you.
That's the question I have.
Thank you, Catherine, for your fantastic request and suggestion. And for you, as I can answer straight away and say that both the executive and the board of directors will consider your request. Thank you very much.
Thanks.
Good morning.
Morning, Bwana Chairman. How are you?
Fine, thank you. And I hope you are also fine.
Yeah, I'm fine. We are just relaxing. Today is holiday. Thank you. My name is Daniel Timobo. I am a shareholder of Equity Bank for many years.
Daniel, where are you calling from?
I'm calling from Nairobi.
Thank you. Go ahead, Daniel, and ask your question.
All right. First of all, I want to take this opportunity to thank you for the good work done, your board, and the management. You have done a very commendable job. A balance sheet of almost 1.5 trillion is not a mean thing. The profits that you are making, all your subsidiaries making profits, that is a very commendable job. So receive those accolades for the good work done. Now, I have a question on the issue of what Dr. Mwangi has said about the digital platform, about all the transactions, over 95% being done outside the bank. And so I was asking, although it has been that the physical branches will be used for other things, don't you think that maybe you can reduce the fixed cost by maybe reducing some of the branches where they are very highly concentrated, because not very many people now will go to the bank? For example, if Nairobi has 20 banks or 30, you can reduce them to 10 because very many people, including me who am a customer, I rarely visit the bank. So, and then the issue number 2 is we have seen what PLC has done. PLC, I'm sure within the next 2-3 years, it is going to overtake all the other subsidiaries, including Kenya. And that is a very commendable job. So, is it now time for you to look north? And looking north, I'm talking about Ethiopia. We have seen Safaricom go to Ethiopia, and within a year, it has turned things upside down. It is making profit. Is it now high time for the bank now to not to look south, but maybe to look north or to look west? Then number 3, I have seen Dr. saying that the economy is resilient, the bank is resilient, which is very good. But according to the global economy and the way even our economy is, being that economy these days is a global being, we can see that maybe in the times to come, the NPL loan book might be a bit high, and so I just wanted to ask whether the bank has enough shock absorbers to be able to weather this rough terrain, because the terrain is a bit rough. And I know that according to what Dr. Mwangi has said about the growth, return on equity, all the subsidiaries are doing good. I'm sure that you have a strong shock. But do you think that you have stronger shock for that. And then the last one is, you know, you read to many different segments of our economy. If you look at the board and at the management, you look at the sectors of our economy and even the countries that you are operating in, which do you think is the one that poses the greatest risk of NPLs? Because now the business, you cannot know how this will be. Which do you think that is the segment that maybe carry the greater risk of NPL? And then finally, Kabisa, there is a post-balance sheet event. You were in the news the other day about a bank that you acquired in Rwanda, and I'm sure that the board had done due diligence. And so what do you see this bank contributing bottom line? Do you see ourselves now going to a balance sheet of 2 trillion in the next 2-3 years? Otherwise, thank you very much even for the dividends. Thank you for everything. And we are together to support you and to do everything. And I am sure that as the bank goes forward, even as the shareholders and the customers will also benefit. So thank you very much for you, the board and the management, for the good work done. Of course, being led by the driver, Dr. James Mwangi. Thank you.
Thank you very much, Daniel, and thank you for appreciating the work that the board, the management, and the staff of the bank continue to do. Yes, we shall be answering your questions also later. Thank you. Good morning.
Good morning, Mr. Chairman. How are you?
Fine, thank you. Are you okay?
I'm okay. My name is Stephen Irogo Kimani from Thika. I have 3 comments and 3 questions. First is to commend you, the board and group managing director, Dr. James Mwangi, and the management for the good work they have done to transform this Equity Bank to be the largest bank by customer base. Another comment is about the image registrars. They have a good reporting performance towards this AGM. And also, I can look at the total equity and liabilities has gone up to over a trillion. That's a good job you have already done. But you have taken over by your rival. But I know next year you will be number 1. And question 1. Yes, I see the essence of the digital transformation, because since about 7 years ago, I have never stepped in the equity branch to deposit money. So maybe going there to get an ATM card. So it has gone a good way to me. Another on that issue, I want to ask: is the group to continue having many branches, because many people are going digitally? Another question is on the non-performing loan. Want you, group managing director, to emphasize on that, because I can see it's also a key audit matter on expected credit losses on that particular matter. The third question is about the increase in share capital. I have seen the circular. You need to clarify more on that, because we passed on the ESOP 5 years ago. Why has this not been implemented? And the final question is, I can see the retained earnings, and we only ask about the bonus shares and also we have a good dividend payout this time, and I am happy. But when is the payment date? Thank you, Mr. Chairman. God bless you.
Thank you, Stephen. Thank you for your questions. We shall be answering them shortly.
Thank you. Thank you.
Good morning.
Good morning. Good good morning. Can you hear me?
Yes, I can hear you very well. Please tell us your name. Mm-hmm.
Yes, a couple of years back, you wanted to buy Barclays. What happened? Because by now we could be in South Africa. We don't know what happened to the deal, although we gave it a go-ahead. And second, the question I also want to know is the expansion that you have done of late. How come you're giving us very little dividend? We want to enjoy the big company that is also in East Africa. And my final question is my ATM card. Can I use it in these other countries? Or is it just only for Kenya only? Thank you.
Thank you very much, Mr. Odhiambo, for your questions. We'll be answering them shortly. Thank you. Thank you. Thank you, shareholders. I think because in the interest of time, we shall consolidate these questions and answer them. Before we proceed to respond to the questions, we shall provide you with the guidelines on how to cast your votes for the resolutions, which have been placed before this AGM, as summarized in the notice of this meeting. Please watch the upcoming video, which will guide you on the voting process. Thank you.
Welcome to the Equity Group Holdings PLC Annual General Meeting. Once voting is opened, you will receive a USSD code on your phone with guidelines on how to vote. Once voting is open, you will receive a prompt on your mobile phone or email asking you to key in and dial the code using
Ladies and gentlemen, we will now respond to the questions from shareholders who dialed into the meeting, and I wish to thank them all. We have also received questions from the live stream, but because of time, we shall answer these questions and the answers will be posted on our website. I wish to note that we also have shareholders who are dialed in from the United States, from India, from the UK, from Saudi Arabia, and from as far as Singapore. So I will now invite Dr. James Mwangi to lead the management in responding to these questions. Dr. James.
Thank you very much, Chairman, for this opportunity. I want to really appreciate the shareholders for very interactive question session. I will start with a question on the technology by Sally. Sally wanted to know how we are using artificial intelligence and whether it is an opportunity or a threat. Sally, an excellent question. Artificial intelligence, or AI as commonly referred to, is both an opportunity and a threat, depending on how one responds to artificial intelligence. At the bank, we have decided to use artificial intelligence as an opportunity in decision making, in seeking to understand our customers. We have embedded artificial intelligence from machine learning to the level of analytics and to decision making. Our credit scoring has been enhanced. The reason that we are able to get 98% of all our interactions with the customers outside our premises is because of use of artificial intelligence. We are using robots to do reconciliations that are driven by artificial intelligence. We have extended to management of threats, including frauds using artificial intelligence, or managing fraud using artificial intelligence. So it has really become a very powerful tool, and particularly analytics has really helped us in scoring. The finance bill, I will ask my colleague, the chief economist, to deal with the two questions: the finance bill, what it portends, summarize it, and also talk a little bit about the economy and the correlation that there is between the finance bill and the state of the economy and the microeconomic environment.
Thank you, Dr. Mwangi. And good morning, good day to all those who have joined the AGM meeting. The finance bill, in brief, proposes tax increases for the Kenyan economy. That's in line with the fiscal consolidation program that the country has undertaken. This is the government's efforts are trying to restore the debt position to a sustainable position, and in order to do so, they need to bring down the budget deficit. So that implies either improving revenue and also reducing your expenditure side. So the finance bill proposals included quite a few tax increases, and that is part of the government's efforts to increase the revenue that they're generating so they can bring down the deficit. Now, in terms of the implications on the economy, as you can imagine, a higher tax burden does imply that households will have less disposable income. So what we do expect is a slowdown in spending in the economy, so slowdown in consumption, and of course that has implications for GDP growth going forward. In terms of businesses, it implies that there's a slowdown in retained earnings that are available for them to reinvest back into a business, into the businesses, and a slowdown in investment by implication also does undermine growth prospects. So in terms of implications of the policy trajectory we're seeing in the economy, it does imply that the tightening we're seeing on the fiscal side added to the tightening we're seeing on monetary policy, and by that I'm referring to the increase in the interest rates that we saw earlier this week of a percentage point to the CBR rate, that does imply that we should see some softening in growth going forward. So as you are aware, 2022, the economy grew by 4.8%. The drag on growth last year was the agriculture sector, which was contracting because of the protracted drought the country was experiencing. The good news for this year is that agriculture is expected to grow on the back of improved rainfall. However, the tighter policy environment, both on the fiscal and the monetary policy side, does imply that there's downside risk to that growth. So, in brief, the Finance Bill proposed measures that reflect fiscal restraint, tightening on the fiscal front, which will slow down growth going forward.
Thank you very much, Yvonne. I will now turn to Brent, and Brent, the same question, but what will be the implication of the Finance Bill and the macroeconomic environment to the strategy of the group? Brent is the Group Chief Strategy Officer.
Thank you, James, and good day, everyone. So, from a strategic lens, and if you stand back, this announcement and the passing of the Finance Bill is just one of many steps that government is looking to take to position Kenya more sustainably and position it in a manner that allows it to be the gateway into East and Central Africa, underpinned by a productive manufacturing sector, leveraging off the raw materials that Kenya has. So if you stand back and you look over the past 15, 20 years, Kenya has been investing in a lot of productive assets. It was financed through debt. Growth was largely public sector driven, infrastructure sector driven. And currently with this Finance Bill, these are just one of a few steps that government will need to take to transition from what was infrastructure-led growth, financed by the government's balance sheet, towards a more private sector-led growth, driven by the private sector, the users of those productive assets in the form of infrastructure. So strategically, what we see is a country where there is this transitionary period, where you have this fiscal consolidation. Some of it, well, a large part of it, particularly from a monetary perspective, driven by global events, but also the domestic events of higher inflation underpinned by the drought has caused government to have somewhat of a contractionary stance to their policies. But the bigger picture is that this is part of the steps required to transition Kenya to essentially leverage off its productive assets of infrastructure. So strategically, as Equity Group, we would look to target those sectors that would be the beneficiaries of infrastructure, and essentially these are the micro, small, medium-sized businesses. These would be the anchors to ecosystems that are the manufacturers that leverage off the power generation that has almost tripled over the last 10, 12 years. But also, Kenya is well positioned because of its strategic decision to go into more sustainable power generation. Kenya has also positioned itself to attract investment in areas of manufacturing that uses renewable energy. At the same time, the infrastructure that has been put in place has allowed Kenya to connect itself to the East African community, to its neighboring countries, and ultimately be that gateway into East and Central Africa. This further highlights the expansion of our clients to the region, and strategically, and there were some questions around diversification, we are following the economic activity across East Africa, and that partly explains why we have increased allocation of capital to Rwanda. If I overlay this with what's happening globally, and maybe touch on the points that our group economist highlighted in terms of recent increase in interest rates. I think it's important to highlight that with this increase in interest rates, the attraction of Kenyan assets, and we can speak specifically around government securities, Kenya now has the highest real interest rates in Africa. So real interest rates is essentially taking your central bank rate and deducting inflation. What that means is that the Kenyan assets, particularly when it comes to government securities, become more attractive. This is somewhat supportive of the Kenyan shilling over time. And these steps that government is taking, whilst it has some cyclical near-term effects in terms of disposable income and people drawing down on their savings, to the extent that the revenue that government collect is allocated to productive economic activity, this will have transformational effects to the economy. So Equity Group is positioning itself across agriculture, in the case of most of our East African countries, the extractive sector in the case of Uganda with its oil and gas, particularly in its ecosystem, as well as DRC with its mining commodities, particularly those focused in the electric vehicles. In addition, because of our strong balance sheet, our large single obligor limits, we are able to support manufacturers. Importantly, as part of that, we have this ecosystem approach to support the users of the infrastructure that the Kenya government has invested in. And across all our markets, including Tanzania, Uganda, Rwanda, infrastructure is being built. So the bigger picture, if you step back and you look beyond the next 18 to 24 months, which households, businesses will be impacted by this consolidation, contractionary approach of government. Beyond that, and to the extent that expenditure and policy is conducive to business utilizing these productive assets of infrastructure, East Africa, and Kenya is increasingly underpinning East Africa. We see and East Africa remaining one of the highest growth regions in the world. Historically, over the last 10 years, East Africa, together with Kenya, has been one of the highest growing regions, growing 6%. The expectation over the medium term is to grow north of 6%, closer to 7%, and that positions the East African community to be the gateway into Africa, especially given what the African Union is doing with the Africa Continental Free Trade Initiative to essentially integrate Africa and have a one Africa. So Equity Group has dimensioned its strategy both in terms of a tactful way, looking at the near-term implications, and that does imply putting in place the risk buffers to some of the questions, but more strategically, over the medium to long term, Equity Group also appreciates the steps that our various governments are taking to position the country, and Equity Group has aligned its strategy to support government initiatives across our markets to ensure, at the end of the day, that the micro, small, medium-sized businesses get to utilize these productive assets and ensure that this growth that we expect remains inclusive. And that ultimately underpins our Africa Recovery and Resilience Plan. Thank you, James.
Thank you very much, Brent, for that elaborate response on how the finance bill, the fiscal policies being effected will affect our strategy and position the group in the marketplace. Let me take Sally's third question on the role of the group in supporting SMEs to bounce back. It is true in the region that we operate in, SMEs or the informal sector, as generally referred to, contribute 92 to 96% of the economy and truly represents the ownership and local capital in the region. And as a result, it's the core of our business. 72% of all our loans are from small, medium enterprises. And so we are aligned to their well-being and to the health of that sector. As a result, we have kept our credit flow to that sector on so that we can keep the rights of the economy on. We have deliberately and intentionally strengthened our interventions through financial literacy, through entrepreneurship training. I want to really recognize the great work Anthony Kiogora in the foundation and his team have been doing to strengthen, to capacitate SMEs and to de-risk them so that they continue to play a light role. If you look at the presentation I made on the prosperity business model, we have 2.4 million women and youth who have been accorded financial education so that they are well prepared to receive financial support. We have seen 3.8 million farmers impacted. We have seen 251,000 small and medium farmers reached through these interventions. And all this is intended to strengthen our ability to support this subsector of the economy that forms and provides livelihood to majority of the population. So during this challenging period, we have launched the African Young Africa Work Program. This is a program that is intended to support young people, to support businesses. And I'm glad to report that out of training 1.6 million young people, funding 400 of them to start a business. We have seen them employ 1.3 million people in the last 3 years. So sadly, we shall continue with this effort. We have also worked very closely with MasterCard Foundation to strengthen credit flow to this sector using guarantees. And so every effort is being made to position the SMEs to bounce back and to sustain them during these volatile times. In terms of your question on sustainability, I want to invite my colleague Leshma to talk about the measures we have put in place to enhance sustainability of the environment in the region. But before I call Leshma, the group has been very strong on social sustainability. That is what the foundation has been known for many years. But in the last 4 years, we have focused on environmental sustainability to a great extent in energy, in tree planting, the whole spectrum. But also at the same time, we have really strengthened our governance sustainability, and that's why the group has dedicated an executive director, Mary Wamai, to focus on governance. And after Leshma, I will ask Mary to briefly talk about governance, and Dr. Khalil to talk a little bit about social sustainability. Leshma.
Good morning, everyone. So on the sustainability front, I could probably summarize it in 4 categories in terms of what we've been doing. Number 1, we've enhanced our risk management procedures with respect to environmental and social to help our clients identify and mitigate the environmental and social risks that they're dealing with. Two, we're actually actively looking at how we can support our clients in terms of funding sustainable finance, whether that is clean energy or other practices that they're looking at. Three, through the foundation, there's a lot of work being done around helping build capacity around areas such as regenerative farming or other aspects of clean energy as well, that is helping our clients in terms of building their capacity and what they need to do to take forward. And four, we've been looking internally as well. We've been doing a lot of work in terms of our own operations, but in addition to that, working with our suppliers in terms of what we can do to manage our own footprint, but also on other aspects such as social in terms of gender and diversity as well. So that's how I would summarize 4 key areas that we're working on sustainability. Thank you.
Thank you very much, Leshma. Maybe Mary on governance or sustainability.
Thank you, James, and good day all, and thank you for attending the meeting and for your questions and comments. I think I would just like to just remind you that the effective corporate governance is embedded into the group core values under the acronym PICTURE. E stands for effective corporate governance. And on a day-to-day basis, we aspire to meet the requirements of governance at all levels in every way. And a lot of effort has been put in this area. What we have realized over the years is that strong governance practices give us a very solid foundation, even as we grow and expand our business into the geographical spaces that we have done so far and the ones that we are aspiring to do, and also into other sectors and areas of business that we had not started before. As you have heard from our CEO, we have gone into non-traditional areas so far with a great success. So this will be an area of focus. We have started right at the board level, and you will see, even from the integrated report, the capacity, the very strong capacity, diversity of skills and competencies that we have created in, first of all, the board of the group, which is the one that governs the whole group, but also supported by the subsidiary boards. And we continually review the board so that we keep on adding the skills and the competencies that the businesses require as they grow in the region. And we are so far very happy. We've also seen that we have focused a lot also on diversity, even in terms of not just skills and competencies, but also gender diversity. And you will see that in all the boards, an increase in our women directors, adding a lot of value in their various areas of competence. And this is something that we are continually working on as one of the criteria based on the board diversity policy. We have also enhanced and done a lot of training, both at the board level and also at the management, and also down to our staff at all levels, on a code of conduct, identification of areas of conflict, and also supported by the risk team led by Sam. We have also looked at embedding risk as a practice and as a culture. So this is all part of the culture we are building, a culture where there's zero tolerance to fraud, there's zero tolerance to corruption, and every staff member and board member is expected to adhere to the highest standards of governance, and also compliance with the regulations, laws, and procedures that govern us as a listed company and a listed entity, and also governed as a banking entity, and recently also now governed as an insurance entity under the various laws and regulations. So all those laws and regulations are being adhered to the letter. We ideally do not ask for waivers from compliance with any regulation. We aspire to fully comply with them. And that is how we are building the strong institution that has a strong basis for the growth that you are seeing. So shareholders, the assurance I want to give you as the director in charge of strategy is that no efforts are going to be spared in terms of adherence to effective corporate governance standards. And we don't just stop at the minimum requirements of the law. We go a little bit further in terms of what we think is going to carry us into the next level. Thank you, shareholders.
Thank you very much, Mary Leshma. The last component of sustainability is the social sustainability. I invite Dr. Joan Colil to speak to this subject.
Okay, good afternoon. On our social impact initiatives, we embed ourselves in our communities and across the human life cycle. So you'll find that the work that we do spreads right from childhood all the way up to old age and about empowerment. We start our programs in education and leadership where we are empowering leaders and recruiting leaders for the next generation through our various programs in that pillar. In enterprise development and financial inclusion, it's about enabling or providing capacity for MSMEs in that sector through training. The same thing in agriculture, where we are doing the same thing for our farmers, and we've been able to impact about 4 million farmers through capacity building, transforming them from peasant farming into agripreneurs, and we're doing this across the region. We're also working very closely with our institutions and also individuals in our environments, climate change pillar, where we are doing a lot to safeguard our environment in terms of breaking down the principles of climate change adaptation and mitigation for our cohort of customers as well. In health, we are looking at the aspect of human capital and development, and we've recognized that health is a critical element towards human capital development. We do this by serving our communities, by offering affordable and accessible healthcare services. And on accessibility, we've been able to reach 30 counties in Kenya so far, having attended to about 1.2 million patients as at the close of last year. In social protection, we are saying we're not leaving any cohorts of our population behind, so we are attending to our orphans and our vulnerable children, the refugees, the most indigent of our populations, and being able to address their needs and work towards empowering them through enterprise development and financial inclusion. We've recently onboarded an innovation pillar, riding also on the successes of the bank that we've been able to see that this will drive us to be able to reach further in terms of our social impact, both impact and outcomes across the social impact work that we do. So it's to say that we embed ourselves very closely with our communities to try and understand the social and economic challenges that they face, and as Equity be able to provide solutions towards that. Thank you very much.
Thank you very much, Dr. Colil. We then go to the question by Joan Zhao. And we are glad that Jones, you bring it out, what was also raised by Mr. Othiambo, of the tension between expansion and dividend payout. And I'm really glad that this has played out in the open, that we need to delicately balance how we allocate internally generated funds between risk management and mitigation, how we create buffers through retained earnings and capital retention, how we pay dividend in compliance with the policy, and at the same time providing capital for expansion and growth. And I'm glad to observe that the subsidiaries that we have opened in the last 12 years in the banking sector, all of them are not only profitable, but they are generating returns on equity higher than the cost of capital, meaning that the expansion is value creative. We are seeing subsidiaries like Rwanda becoming much profitable than the old subsidiaries, suggesting that the selection of the markets that we operate in are good. I liked the observation brought up by Kimodo about the growth of DLC, again showing and confirming that the selection of markets that we're entering in will create significant value for our shareholders. So we'll continue with that delicate balance, but in that delicate balance, Ethiopia has been a priority market for the group. We have already established a rep office that has helped us to understand the market, establish relationships, but the regulation has not been fully enacted to allow foreign banks to enter into the market. But we know the process has started, as in it's in Parliament, and we'll jump into the opportunity at the right time. We'll need to do a deep analysis, and we are glad that a leading Kenyan company has entered in the market, and so we can be able to, through them, understand the market, analyze the market, and hopefully by the time the opportunity is over to the banking industry, we should be ready. Shareholders, Ethiopia is an attractive one because it allows us to continue with our creeping expansion strategy. The infrastructure to Ethiopia, whether it's electricity loads, have been completed and interconnected. It's 110 million people market, and the financial sector, because it's only a domestic financial sector, provides an opportunity for an international bank or a regional bank like ours to be able to play pretty well. Allow me then to move to the question by Emmanuel Zamba from Busia on risk management against fraud, and also management of risk in new environments, with the specific focus on South Sudan and DLC. And I want to invite our Chief Enterprise Risk Officer, Mr. Gitwekere, to address himself to the question of Emmanuel. Sam.
Thank you. Thank you, James. Starting with the question on fraud, I'll quickly highlight the process that we follow to manage fraud. And I'm aware that the question was asked with a certain context, a certain market in which we operate. For all our processes through which we render services and products to customers, we conduct a risk assessment of those processes to understand areas of vulnerability that could be exploited by fraudsters, or where we could lose money due to errors. And having identified those vulnerabilities, we design controls and implement those controls in order to mitigate frauds. We also look for opportunities to automate manual processes because we find that fraud often occurs due to manual errors. We periodically test the controls that we have designed to ensure their effectiveness, both from a design and operating perspective. And where required, we use the lessons that we pick up to improve on those controls. Where we are faced with actual frauds, in spite of everything I have outlined, we obviously investigate for purposes of recovery of the funds, but more importantly, we look for opportunities to learn from the failings so that we can improve our systems, our processes, provide training to our people to mitigate against further frauds going forward. So what I've outlined is the fraud management approach that is enshrined in our fraud risk management framework and our enterprise risk framework and policies. We manage fraud like the various other principal risk types following the 3 lines of defense model. So we have people, and we ensure we have competent, adequate, and well-trained people, and offer continuous training to those people. And we have strengthened resourcing in both the first and second lines of defense for fraud quite significantly. We continue to revise and update our processes, policies, procedures on an ongoing basis, at least annually, to ensure relevance to the current operating model and the environment in which we operate. Finally, we have the systems that we continue to improve to fight against fraud. In the specific market where the fraud happened that was referred to, it was a card fraud arising from operational errors, as we understand, and those have been seen in the industry, and we learn from external events also. We've taken lessons from what was reported to use that to improve our internal performance. Turning to the question on South Sudan, the war in Sudan obviously has potential impacts on South Sudan by virtue of trade between North and South, so it impacts the performance of the economy. Business people are impacted by virtue of the flow of refugees from the North coming to the South, which creates stresses and instability in certain areas. There are disruptions, potential disruptions, various people are alert to the potential to disrupt the flow of oil from South Sudan that goes through a pipeline in Sudan. All of those are being closely monitored by the government of South Sudan, and internally within the bank, we continue to monitor and assess those conditions. Indeed, just last month, myself and a number of other colleagues were in Juba, meeting with customers, meeting with government officials, and obviously our team in the business in South Sudan, discussing the developments and understanding how potentially they impact the bank. So for the moment, we remain selective in the customers and segments that we deal in. We continue to support customers working closely and taking advice from the government, the central bank, to ensure that SMEs, consumers across NGOs, international development organizations, and consumers, employees, civil servants continue to be supported by the bank. And we received positive feedback during our visit to South Sudan. Thank you.
Thank you very much, Sam, for the comprehensiveness with which you have responded to the question of risk. That takes me to the fourth question asked by Catherine Duda, which was at high level responded by the chairman, where we were requested to look into providing support to our shareholders as regards medical insurance. Shareholders in our social sustainability focus, the scholars that have managed to do medical degrees at universities, we've established a franchise for a medical franchise for them called Equity Medical Centers. To date, we have 84 medical centers that are providing to community high quality services, medical services. They have been ranked among the top 3 best providers of medical services, whether by affordability or quality in the country. We're extending Equity Afia franchise to DRC and hope we'll be able to open 30 medical centers by the end of the year. We are focusing on increasing Equity medical centers to 300 in Kenya so that all our customers can have really access. So, Madam Catherine, you seem to be ahead of us, but specifically you asked whether we could do a social sort of intervention or social responsibility to avail medical services to our shareholders. And we have been thinking about it as the chairman directed, that we now implement. And I want to ask managing director of the insurance business to help link how we want to incorporate not just our shareholders, but our customers through a medical insurance and the provision of that high quality, affordable health through Equity Avia. Ajara.
Thank you, James, and good morning to shareholders. As asked by Catherine and as mentioned by James, the provision of quality and accessible healthcare is important because we acknowledge that life and health are the key ingredients that enable us to create capital and wealth. And so, as you mentioned, Catherine, we can't go far as a partnership if we cannot work with you to protect your health and your wealth. Now, one of the things that has been done by Equity Group, as mentioned by Dr. James, is a very strong investment in Equity Avia. A lot of you may recognize that currently in Africa, being able to access quality and affordable healthcare is a challenge. And so for us to be able to come in as the last mile from the insurance side to provide a product, we needed to ensure that the entire value chain had been designed well as protected. So currently Equity Avia, as mentioned by Dr. James, has over 84 centers, targeting to have over 150 in the next year or so. And the idea is to ensure that every Kenyan, every African in the markets we operate can have within 5 minutes access to an outpatient facility that has a doctor who can be able to assess them, has clinical or laboratory services, has pharmaceuticals that provide not only branded but also generic and ensure that you can be treated not only for your day-to-day ailments but also specialist services such as ophthalmology as well as dentists. And so we believe by making this investment, over time we will be able to ensure that we can not only guarantee you quality, but we can guarantee you a price as our members. Inevitably, where we're targeting to go with the insurance business is utilize the Equity Avia network to then provide an insurance product that can be accessed by the entire market, by the masses. Now, insurance for us would be very affordable if we can pool the risk. And yes, Catherine, as you mentioned, our shareholders would be targeted. We would be very happy then to be able to use this particular network to ensure that we can design a product that works for you. Now, the last thing I will mention that we're doing on the insurance side is talking about health-seeking behavior. Now, at the end of the day, we believe that health as an asset is owned by an individual. And so it's not about only the curative, it's also about the preventative medical health care. So currently we're working with the teams in Equity Avia to be able to ensure that on an ongoing basis, you're aware of what your health issues are, you know what your status is. If you have a chronic ailment, you're managing it proactively, not through medication, but also through diet and exercise. So we don't only want to be your partner when you're sick, we want to ensure that earlier on during your journey, whether you're young or old, whether you're actively working, whether you're a shareholder, that we bring in preventative awareness so that you can own your health. And in there, we've designed a very innovative rewards program using technology. Someone talked about AI, that we can then work with you to create bonus points where as you continue to have improved health, then we can partner that back into improved products. We can also partner that into improved incentives, which, yes, Catherine, you mentioned would include discounts in terms of how we've priced your products. So on my end is to thank you for bringing up this conversation and to invite you as shareholders to continue to partner with us as we diversify the solutions of Equity Group over and above banking to extend to insurance solutions.
Thank you very much, Jara. That brings us to the fifth question by Mr. Daniel Kimodo. Mr. Kimodo, I guess we have answered your first question on Ethiopia. We have also answered your question on the global economy through our economist and director of strategy. And you asked whether we are strong enough for the global shocks. And Mr. Akimodo, that is why I took quite a bit of time to explain to the shareholders the capability that we have built in terms of shock absorption, whether it's capital buffers, whether it's liquidity buffers, whether it's coverage of NPL or provisions. But every good thing can be made better. So I would say there is always room for improvement. So we'll keep on working on that. But I think the most important thing in managing the powerful shocks that you have talked about is strengthening our human capital and our human capability. Daniel, no organization can be better than its leadership. So what we have chosen to do is to strengthen our leadership, and that explains why we have come to the shareholders and said, if we implemented an ESOP scheme, it will help us to attract the very best in the world, and it would also help us to manage cost by splitting between fixed and variable cost, and it will also help us to manage performance and mitigate and manage risk better because we'll be fully aligned. But you asked a question on what is the greatest risk in the credit sector, and allow me to invite Emmanuel to speak to credit and how the credit risk is spread across the sectors, and then we'll be joined by Christine Brown on how they are managing NPLs and what assurances they could give the shareholders based on the information we have at the moment. Emmanuel.
Thank you very much.
Emmanuel is our Group Director of Credit. Thank you.
Thank you very much, Chairman, GCEO, and good afternoon to shareholders and my colleagues. My colleague will be speaking about the NPLs, but I would just like to make a preliminary statement on the NPLs. Though our aspiration as a bank is really to get our NPLs to 5% and below, what we have achieved at the end of 2022 is around 7.7% against an industry average of about 14%. Questions have been asked across the financial space how we were able to do that, because most of the banks in the subsidiaries, as well as in Kenya, where we have the largest asset book, are still within the double digits. I would like to really just say that maybe that could be leveraged on by other banks as well. What strategies did we really adopt to ensure we are able to maintain a single digit in our NPLs? We did a real aggressive growth in the sectors that are identified under our ARRP. We focused on those areas and grew those areas selectively and sustainably. The second strategy that we adopted was to ensure the current and existing book does not slip into NPL. And how do we do that? We ensure that we have early alert systems in place by monitoring these exposures on weekly basis, having meetings so that we'll be able to really identify early deterioration in the book. And finally, we have also really formed units that are responsible for recovery. And that one of those powerful units is really being headed by Christine. Now, in terms of how we managing credit risks within the bank, we have had a number of initiatives in the last 2 years that has really impacted our book. The first thing we did was really to create credit risk frameworks. What are these credit risk frameworks? This is how we identify our risks, how we appraise those risks, how we monitor them, and how we report them. So we develop a framework that is adopted across all the subsidiaries for identification of risks, for the management of that risk, and how we report them to the board. Secondly, we have also put in place our group credit policies that really highlights or gives the guidelines as to what and how you need to approach credit, and that ensures consistency and transparency across all the subsidiaries. The third initiative that we did was to look at the structures within those countries. What are the credit risk structures there? And what will be the reporting lines? And what units within the credit structure are very necessary? We have been able to put that across. The next question you should be asking me then is, having the structures, what next will you do? Basically, we need to really resource those structures with the right skill sets to ensure that we are able to deliver. We will continue to be in this VUCA environment maybe for the next 36 months. So what are we doing to maintain quality of the book and also to stem NPLs? Because there was a question on the fact that NPLs are increasing because of the challenging environments that we are in. So what we do in equity or within equity credit, we ensure that with the right skill sets that we have within origination, as well as within the crediting, we are able to do quality onboarding. We are also supporting the SME space in terms of assisting and advising our SME clients as to the business models that they have. Those old business models will not apply in a turbulent environment that we have now, so we'll continue to support them. We continue to do early alert meetings. We have created a special asset unit that will look at risk structures where it's necessary, and we are also focusing what I would call cash flow-based lending. In a challenging environment, you go back to basics. That is the advisable position, to go back to basics. And going back to basics will mean let us do the simple things. Let's keep our exposures to short term and selectively also do medium and long term. I would like to give the opportunity to my colleague to
so as Christine, you talk on how you are dealing with those which are slipped to NPLs and how the recovery is being managed. Maybe from that experience of what has slipped, which sectors are reflecting the highest risk? Kemodo wanted to know.
Okay, thank you very much. Esteemed shareholders, Chairman, I think our greatness as a group really lies in our fidelity to our purpose, which is really transforming lives, expanding opportunities, and creating opportunities for wealth creation. And this we do whilst giving dignity. So sometimes it requires us to make the very difficult decisions in encouraging and assisting our borrowers to reset and move, and in certain instances to sell unproductive assets in order to start afresh. So in our conversations in the Group Special Assets Management Unit, we continue to remain the listening and caring partner. Moving in early, as my colleague said, the early warning system that has been put in place enables us to restructure where we can, and this is what we are doing largely for our Spire Bank, former Spire Bank customers, but also in this environment where we recognize that distress can be caused by macro effects. We listen to our customers, we help them to restructure, and many instances we have had very successful exposures coming back to the book and moving back to our credit colleagues. However, in instances where we see that the distress is more than the borrower can bear or carry, it would be remiss of us to allow them to continue turning around in that situation of distress. And in that case, our goal and our purpose is really to preserve shareholder value. We move in and exercise our legal and our statutory rights for recovery, either through selling the assets that are in our custody and charged to us, or moving to the legal systems. And we acknowledge that we operate in environments where we have very supportive judicial systems that enable us to be able to recover and preserve the value that we spoke about. the areas where we're seeing a lot of stress, and a lot of this has moved in because of the COVID situation, but also as the CEO had spoken about earlier, we have come through from 2016 very difficult periods that he had defined. So those have added stress, and we see this in certain areas like the hotel industry, in logistics, in real estate, where over time the bank has been divesting, but we are able to support the ecosystem around it. And we are focusing, as Emmanuel had said, now going forward in the areas that are in a strategic plan, which is the ARRP. Thank you, and back to you, Chairman.
Thank you very much, Christine Brown and Emmanuel McDare, for that very precise question on how we are managing the loan book, the asset quality of the group. Between Mr. Daniel Kemodo and Mr. Kimani from Thika, you wanted to know that given the benefits of the digital platform that has managed to get 98% of our transactions happening online and off from our premises. The testimony by Mr. Kimani that he has not been in a branch for the last 7 years, and yet he remains daily relevant as a customer. How do we rationalize the branches? What do we do with the branches? And so that question I will ask the Chief Operating Officer, Samuel, to respond to the question.
Thank you, Group CEO. Daniel and Mr. Kimani from Thika and our shareholders. We continue to use the approach to reach our esteemed customers at the branches, and you are rightly saying most of our customers are now accessing the financial products that we offer through the digital channels. So the branches will more or less be left for serving our agents because we have the esteemed agents who would want to extend services to the inner areas, and what we do is the hub and spoke. So branches may not be expanded as you said, but they will be in areas where they're supposed to serve agents, and also to offer more services that may not be cash related. We talk about insurance. You've heard what Equity Life Assurance is doing. So those services might be continued advisory in the branches, but the cash in, cash out, and services that we move to the digital services will reduce being offered in the branches. Similar to the agents, we'll continue expanding the agent network, but beyond expanding the agent network, we'll also increase and continue to innovatively add more product on services that our agents can continue availing a bigger offering to our customers. On the digital channels, again, is to offer stability, ease of access, but also enrich in the menu that we offer. So you'll find more services going into the digital services, offering insurance also in the same line, but also ensure stability, security of the platforms, and uptime, that you're able to have uptime of close to 100% on those channels. Thank you.
Thank you very much, Sam. And I think, Mr. Kimani, your question on NPLs have been addressed. Your observation about increase in capital through retained earnings explains our strategy of building buffers to manage shocks and risk, but also to be able to meet our obligation in terms of dividend payout policy, while at the same time evaluating opportunities that come along in terms of expansion, in terms of diversification, like the way we are taking a holistic, integrated financial service strategy reflected by insurance or like the rollout as of technology group. In terms of your last question on dividend payout, we are committed to comply with the proposal or the commitment that was suggested that should be paid by 30th of June. That is the day after tomorrow. I wish today was a working day, then that would most likely have been, we could have asked Mary to ensure it is made today, but we shall focus on that. In terms of question by Kemodo on the bottom line and how we'll be positioned by acquisition of Koje Bank, in Rwanda market, we'll jump through amalgamation or merger to controlling 18% of the market share in assets, 19% market share in terms of deposits. We believe Rwanda, which is the most efficient, will scale up and become a systemic subsidiary in that market to take a strong second position, and that then will position us very well. We believe this will be a big contribution, but the wider objective of growth will be from all markets. We have seen DRC maintaining its momentum, and as was predicted, we are watching the space in the hope and believe that in 3 years, DRC will be contending for the largest subsidiary, the position of the largest subsidiary in the market. We are more impressed that it's not just growing, but it's growing profitably. It has now been able to grow its return on equity above the cost of capital, and generally, so it is value creative growth. So we expect to be able to optimize on that opportunity of efficiency. Digitization is likely to take a significant portion of our cost, our fixed cost out, and as a result, we can, and like we have seen cost-income ratio, I took you through the data or information on cost-income ratio. We like the trend we are seeing in the subsidiaries, and that is why they are more efficient because they have no legacy systems. They are online businesses to a great extent through digitization, and are likely to perform and continue to perform better. And lastly, the question by Mr. Othiabo about more dividend. Mr. Othiabo, we appreciate, as we said, we have ensured we have complied with the dividend payout policy. And as you have heard from your colleague shareholders, we have a very onerous responsibility of balancing, building the risk mitigation capabilities of the bank, building the shock absorbers through capital, through coverage of NPLs, and in the process, that delicate balance of how much do you pay, how much do you retain to strengthen the risk mitigation, and how much do you also retain to ensure you continue to increase value creation through expansion, enlarging the cake. That is the delicate balance, and we welcome this conversation. We take a lot of insights from the shareholders, and so as shareholders, we encourage you to keep on speaking, because this keeps on informing us on the decisions that we should make that are aligned to your interest and to your focus. So broadly, those were the questions that had been asked, but I see one question, Mr. Chairman, asked by Joseph Githaiga, it's on Facebook, how will the ESOP share affect the market capitalization? Market capitalization is the value, the entire value of our shares in the Nairobi Stock Exchange. As we said, the objective of ESOP is to attract, retain the best global talent, because we have become a global company. We have become very complex and sophisticated in terms of structure, and as a result, we would like to have people who have managed complex, sophisticated organization. As Brent observed, East and Central Africa has become the fastest growing region on earth. And fortunately, we are in all the markets that are driving that growth. And so strategically, we are very well positioned then to harness that through that growth, value creation for the shareholders. And that is, Mr. Chairman, as management is an opportunity, we are convinced we should not squander. We should use that opportunity to strengthen and to strategically position this group. Because of that possibility of rapid growth, because of any boat rises, if the sea level rises, we hopefully will rise disproportionately. And we can only do that if we have the right competent management skills. And as a result, we are hoping that ESOP will help us to attract that level of skill, that will allow us not only to grow fast, but to register superior performance than anybody else within the region, as has been the trend for Equity Group. So, as we earlier said, Equity will never be better than the quality of its leadership. No organization on earth has ever been better than its management and leadership. So by bringing these top-notch global skills and competence, we hope Equity will improve. It will create much value, and that value will be reflected in market capitalization, and that is what we'll expect to see. When the market recognizes we are strong in risk management, they will pay a premium for our shares, and the payment of a premium means a higher market cap. So we could really work closely with that skill to enhance the value of our shareholders. And lastly, we talked of integrating the entire group, ensuring that digitization has interlinked the entire region. And so I want to confirm to Mr. Odhiambo that his credit card, his ATM card, should be able to work in DRC the way it works in Kenya. It will work in Uganda, South Sudan, Tanzania, Rwanda, the way it works in Kenya. And we are really focusing on cross-border trade. It is not just your card that will work, but Mr. Odhiambo would be willing to support you with the cross-border trade. We can use letters of credit. We can use our infrastructure to link you, and that is why we are constantly doing trade missions across the border. And cross-border trade is best facilitated through cross-border payments. And we encourage our shareholders to take advantage of our presence in the region, to take advantage of the region being the fastest growing region, and our commitment to support them. And as Catherine asked, we should have a priority or a focus on supporting our shareholders so that they do well in their personal and individual efforts, and they also do well in our collective effort through Equity Group. Mr. Chairman, we have tried our very best to answer the questions. We apologize for taking too long, but we felt this is a huge opportunity to speak to all our shareholders, to enlighten them. And so those questions are then messages and information that we are able to deliver simultaneously to our shareholders. Thank you, Mr. Chairman, for the opportunity.
Thank you, James, and management for so ably answering those questions. And I think shareholders, through this interaction during question time, you've also been able to see the diversity and capability of our top management. And thank you, James, for bringing in the management to interact with our shareholders.
Chairman, if I may add there, thank you very much for giving us an opportunity to confirm to the shareholders that we also have gender sustainability. We are an equal opportunity employer. Thank you very much, Chairman.
Thank you. Thank you. Shareholders, I trust that you have given adequate consideration to all matters contained in the integrated report and the questions raised by the members. We have now closed the question and answer session. Shareholders, we will now commence consideration of the proposed resolutions. And we start with Agenda 1, which is to receive, consider, and adopt the audited financial statements for the year ended 31st December 2022, together with the chairman's, directors, and auditors' reports thereon. I will request the company secretary to read out the proposed resolution with respect to the financial statements contained in the integrated report pages 123 to 247, and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To receive, consider, and adopt the audited financial statements of the company for the year ended 31st December 2022, together with the chairman's, directors, and auditors' report thereon. Chairman, Margaret Ndukunzao has proposed and Douglas Wanyiri Ndiangui has seconded the motion.
Shareholders, the resolution to adopt the financial statements for the year ended 31st December 2022, together with the chairman's, directors, and auditors' reports, has been proposed and seconded. I now put it to the meeting for voting. Agenda 2 is to declare a first and final dividend of Kenya shillings 4 per share in respect of the financial year ended 31st December 2022, as recommended by the directors. I will now request the company secretary to read out the proposed resolution and confirm if you have a proposer and a seconder.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To declare a first and final dividend of Kenya shillings 4 per share in respect of the financial year ended 31st December 2022 to be paid to the shareholders on the register of members as at the close of business on 19th May 2023. Chairman, Stephen Irongo Kimani has proposed and Sally Jepkoril Kibor has seconded the motion.
Shareholders, the resolution to declare a first and final dividend of Kenya shillings 4 per share in respect of the financial year ended 31st December 2022, as recommended by the directors, has been proposed and seconded. I now put it to the meeting for voting. Shareholders, Agenda 3 is to approve the remuneration of the directors for the year ended 31st December 2022. I now request the company secretary to read out the proposed resolution and confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To receive, consider, and approve the directors' remuneration report and the remuneration paid to the directors for the year ended 31st December 2022. Chairman, Angeline Mwikali Kimenye has proposed and Kennedy Ambehi Mahiva has seconded the motion.
Shareholders, the resolution with respect to the director's remuneration report for the year ended 31st December 2022 has been proposed and seconded. I now put it to the meeting for voting. Agenda 4 is on the election of directors and noting of retirements. The directors up for re-election are Dr. Edward Odudo, Non-Executive Director. Dr. Evanson Vaya, Non-Executive Director. Samuel Kirubi, Executive Director, and this will be subject to regulatory approval as he is part of the executive management. The profiles of the 3 directors are in the integrated report on pages 249 to 251. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to approve the appointment of Dr. Edward Undundo as a director who, in accordance with Article 100 of the company's Articles of Association, retires from office by rotation and, being eligible, offers himself for re-election. Chairman, Shalini Nalini Popat has proposed and James Mwangi Kibuchi has seconded the motion.
Shareholders, the resolution on the re-election of Dr. Edward Odudo has been proposed and seconded. I now put it to the meeting for voting. I will ask the Company Secretary to continue with the second part of this agenda.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to approve the appointment of Dr. Evanson Baya as a director who, having been appointed by the board on 10th March 2022, retires from office in accordance with Article 101 of the company's Article of Association and, being eligible, offers himself for election. Chairman, David Gitau Maina has proposed and Mary Nyambura Ndungu has seconded the motion.
Shareholders, the resolution on the re-election of Director Dr. Evanson Faya has been proposed and seconded. I now put it to the meeting for voting. I will ask the Company Secretary to continue with the third part of this agenda.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to approve the appointment, subject to receipt of the applicable regulatory approvals, of Mr. Samuel Kirubi as a director who, having been appointed by the board on 12th May 2023, retires from office in accordance with Article 101 of the company's Article of Association and, being eligible, offers himself for election. Chairman, Freddie Arthur Masharia has proposed and Peter Gitau Mwaura has seconded the motion.
Shareholders, the resolution on the appointment of Director Mr. Samuel Kirubi has been proposed and seconded. I now put it to the meeting for voting. Shareholders, kindly note that Mrs. Evelyn Lutagwenda retired as a director by rotation and has not offered herself for re-election. Agenda 5 is to approve the election of the following directors to the Board Audit Committee of the company. Dr. Edward Odudo, Non-Executive Director. Mr. Vijay Gidmore, Non-Executive Director. Dr. Helen Gishohi, Non-Executive Director. Dr. Evanson Faya, Non-Executive Director. The profiles of the directors are contained in the integrated report on pages 250 and 251. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. In accordance with the provisions of Section 769 of the Companies Act 2015, to approve the appointment of the following directors to the Board Audit Committee of the company: Dr. Edward Odundu, Mr. Vijay Gudumal, Dr. Helen Gishohi, and Dr. Evanson Vaya. Chairman, Vincent Mulatia Musili has proposed and Amos Muthui Kilumbu has seconded the motion.
Shareholders, the resolution on the election of the members of the Board Audit Committee has been proposed and seconded. I now put it to the meeting for voting. Agenda 6 is to appoint PricewaterhouseCoopers Limited as auditors of the company and to authorize the directors to fix their remuneration for the year ending 31st December 2023. I now request the company secretary to read out the proposed resolution with respect to the appointment of the auditors and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To appoint PricewaterhouseCoopers LLP as external auditors of the company pursuant to Section 721 of the Companies Act 2015, and to authorize the directors to fix their remuneration for the year ended 31st December 2023. Chairman, Odongo Samson Ademba has proposed and Francis Kimani Gisharu has seconded the motion.
Shareholders, the resolution on appointment of external auditors has been proposed and seconded. I now put it to a meeting for voting. Shareholders, we will now proceed with the special business of this meeting. The first special business of this meeting is with respect to incorporation of a non-operating holding company and its subsidiaries as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows. To approve the incorporation of a non-operating holding company, that is the IT holding company, as a subsidiary of the company to be the holding company for all subsidiaries within the equity group comprising the company and its subsidiaries that undertakes information technology business, which will be the IT business, and subsidiaries of the IT holding company, the IT holding company and its subsidiaries, together referred to as the IT companies. To authorize the board of directors of the company to take all actions necessary to effect the incorporation of the IT companies, including but not limited to executing and filing all necessary documents and agreements and paying all associated fees and expenses, and subject to receipt of any relevant regulatory approval, effect an internal reorganization of the IT business with the intent that the IT holding company, as a subsidiary of the company, will, following the completion of such reorganization, be the holding company for all IT business within Equity Group, and for this purpose to take all actions necessary to transfer the share held by the company in FinServ Africa Limited to the IT holding company on such terms and subject to such condition as the board of directors of the company may deem appropriate in the IT reorganization. Chairman, Duncan Murio Gashero has proposed and Douglas Mogai Ndongu has seconded the motion.
Shareholders, the ordinary resolution to incorporate a non-operating holding company and subsidiaries has been proposed and seconded. I now put it to the meeting for voting. The second special business of this meeting is with respect to the incorporation of a general insurance subsidiary as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows. To approve, subject to obtaining the requisite regulatory approvals, the incorporation of a general insurance company in Kenya, which will be the General Insurance Company, as a subsidiary of the company through the company's insurance holding company, which is Equity Group Insurance Holding Limited, the insurance holding company. To conduct and undertake general insurance business in Kenya, including the company providing a loan to the insurance holding company of a sum of Kenya shilling 800 million for the initial share capital of the General Insurance Company as required under the Insurance Act, Cap 487 laws of Kenya, and the initial operating expenses of the General Insurance Company. To authorize the Board of Directors of the company to take all actions necessary to effect the incorporation of the General Insurance Company, including but not limited to providing all approvals required from the company as the sole shareholders in the insurance holding company, executing and filing all necessary documents and agreements, and paying all associated fees and expenses, and to put in place all the necessary corporate operating and organization structures, commercial arrangement, and any auxiliary arrangements relating to the conduct and undertaking of general insurance business in Kenya. Chairman, Wycliffe Odhiambo Osaso has proposed, and Francis Patrick Nyegenye Adika has seconded the motion.
Shareholders, the ordinary resolution to incorporate a general insurance subsidiary has been proposed and seconded. I now put it to the meeting for voting. The third special business of this meeting is with respect to the establishment of the Equity Group Holdings PLC Employee Share Ownership Plan, EGH Group ESOP, as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows. That subject to any requisite regulatory approval, the establishment of the Equity Group Holdings PLC Employee Share Ownership Plan, which will be the EGH Group ESOP, and be and is hereby approved as recommended by the Board of Directors, and the Board of Directors of the company be and are hereby authorized to do all acts and things necessary to establish and implement the EGH Group ESOP. Chairman, Douglas Wanyiri Ndiangui has proposed, and Joseph Munji Ngungi has seconded the motion.
Shareholders, the ordinary resolution to establish the Equity Group Holdings PLC Employee Share Ownership Plan, EGH Group ESOP, has been proposed and seconded. I now put it to the meeting for voting. The next special business of this meeting is with respect to increase in the share capital of the company and issue the shares to the EGH ESOP as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, pursuant to Section 22 of the Companies Act 2015, the text of the special resolution is set out as follows. That pursuant to Article 46 of the Articles of Association of the company, the maximum share capital of the company be and is hereby increased from Kenya shillings 1,886,837,401 up to Kenya shilling 1,986,144,632.50 by the creation of an additional 198,614,463 ordinary shares of Kenya shilling 50 cents, each representing approximately 5% of the increased issued share capital of the company. Such shares on allotment and issuance to rank pari passu with the existing issued shares. That the directors of the company be and are hereby authorized to allot and issue up to 198,614,463 ordinary shares of Kenya shilling 50 cents each to Equity Group Holding Equity Share Option Scheme over a period of 5 years from the date of these resolutions, in tranches and in such terms and conditions as the director may deem fit, provided always that in compliance with Section 329, subsection 3 of the Companies Act 2015, the directors will seek renewal of the approval of the shareholders of the company to allot and issue the new shares that remain unissued as at the expiry of the 5 years from the date of this resolution over the following 5-year period. That pursuant to Article 47 of the Articles of the Association of the Company, the shareholders hereby waive the preemption rights granted to them under the Articles of Association of the Company with respect to the allotment and issuance of the 198,614,463 ordinary shares of Kenya shilling 50 cents each to EGH Group ESOP. Chairman, Michael Wanyiri Wanjohi has proposed and Peter Namale Mukwana has seconded the motion.
Shareholders, the special resolution to increase the share capital of the company has been proposed and seconded. I now put to the meeting for voting. The next special business of this meeting is with respect to approval of the amendment of the company's Articles of Association as set out in the agenda. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, pursuant to Section 22 of the Companies Act 2015, the text of the special resolution is set out as follows. That the Articles of Association of the company be and are hereby amended by deleting the existing Article 5 in its entirety and replacing it with the following new Article 5. The issued share capital of the company is Kenya shillings 1,886,837,401 divided into 3,773,674,802 ordinary shares of 50 cents each. Chairman, Joseph C. Madhenge Moita has proposed and John Yeshuri Kuria has seconded the motion.
Shareholders, the special resolution to amend the company's Articles of Association has been proposed and seconded. I now put it to the meeting for voting. The last special business of this meeting is with respect to increase in the maximum number of directors of the company. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Pursuant to Section 22 of the Companies Act 2015, the text of the special resolution is set out as follows. That by way of special resolution, Article 79 of the Articles of Association of the company be and is hereby amended by deleting the current Article 79 and replacing it with the following new Article 79. Unless and until otherwise from time to time determined by a special resolution of the company, the number of directors, excluding alternate, shall not be less than 7, not more than 14 in number. If at any time the number of directors falls below the minimum number fixed by or in accordance with this article, the remaining directors may act for the purposes of convening a general meeting or for the purposes of bringing the number of directors to such minimum and for no other purpose. Chairman, Makelton Moses Mwangi has proposed and Samuel Masharia Nyongore has seconded the motion.
Shareholders, the resolution to increase in the maximum number of directors of the company has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we have now come to the end of the special business. Shareholders, voting will close at 2 p.m. and we encourage shareholders who are yet to exercise their voting rights to do so. The results, having been independently scrutinized by PwC, shall be published within 24 hours on the company's website. I will now ask the Secretary to confirm if there is any other business for discussion for which due notice was given.
Chairman, I confirm that there is no other business for discussion for which notice was duly given. Thank you.
There being no other business of which notice has been duly given, I take this opportunity to thank you all for attending the meeting and to thank you for your patience and your participation. And that concludes the business of the 19th Annual General Meeting of Equity Group Holdings, PLC. I take this opportunity to thank our shareholders for supporting the business as it grows during a volatile, uncertain, complex, and want also to reiterate our appreciation of the fact that you attended this general meeting during a public holiday, and I declare the meeting now officially closed and invite Bishop Kariuki to close with a word of prayer. Bishop Kariuki.
Thank you, Chairman. And shall we pray? Our Father and our God, we want to thank you once again for giving us such a peaceful and a wonderful 19th Annual General Meeting. We want to thank you for all our shareholders. Thank you for the Board of Directors. Thank you for the Board of Management and staff. And we also want to thank you for all our esteemed members. Thank you for being with us, and thank you for upholding Equity Group Holdings, PLC. We thank you for giving us a chance to serve your people, and we also want to thank you for expanding our territories. How we pray that as we continue doing this noble work, that you open the doors for us to penetrate and even serve more people for the glory of your name. We thank you and we bless you. We thank you for all that is in store for us, for you are a good God and a generous God. We know that you are the creator and the owner of heaven and earth and the fullness thereof, and that you have entrusted upon Equity Group Holdings, PLC, the lives of many people, and that you have given us the skills, you've given us what it takes for the transformation of these lives. How we pray that you put your hand upon us as we continue this year. Give us expansion and also enlarge our territories as you give us and as you increase our growth momentum. We bless you even as we finish this meeting, for this is our prayer in Jesus' name. Amen.
Thank you very much, everyone who is in this room. Asanteni sana. It's gone very well.
nguvu yetu. Mungu nguvu yetu. Ilete baraka kwetu. Lakini wendao na mlinzi. Na tukae na udugu, amani na uhuru. Raha tupate na ustawi. Mungu twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Tunayo benki inayotufaa sisi wateja na wafanyikazi, tuko pamoja, lengo letu moja, kuyaboresha maisha ya watu.
Equity.
My name is Munir Thabit Suleiman, the CEO for Grain Industries Limited. We are manufacturers of flour, both maize and wheat. We are the biggest wheat miller in the country by capacity and market share, producing 2,250 tons a day of wheat and 400 metric tons a day of maize. The only mill in the country that is ISO 22,000 food safety certification, together with ISO 45001 occupational safety certification, together with ISO 14001 environmental certification, and the only mill in Eastern Central Africa that has a fully fledged microbiological lab that is able to detect the various toxins, aflatoxins. The ISO FSC 22,000 food certification is actually you've got to go through a very grueling experience whereby everything is documented and everything is monitored. And that level is easier as a result of our investing in automation. You see, the lesser number of people you have, the lesser the contamination and the lesser the mistakes. The grain is not touched from intake up to when it is in the packets. We actually are the only millers in this country who are now supplying to KFC Kenya, KFC Uganda, KFC Rwanda. This is Kentucky Fried Chicken, because they were happy with our standards. They actually used to import the flour from elsewhere. I'm also the board secretary of the Cereal Millers Association. All millers in this country have an association, and the association is the Cereal Millers Association, where we look and lobby for issues pertaining to the milling industry. Ajab is the product that actually is a household name in this country. And it was done after a survey where we realized that being sub-Saharan Africa, it's not every household that has a mixer. And so kneading the dough is done manually. And so it was good to have a blend of a product that actually helps the mama. Multi-purpose products that would fit in from chapatis to samosas to what have you. We work with various distributors, wholesalers, sub-wholesalers, Horeca, that is hotel, restaurants and cafes and eateries. We also deal with bakeries, so we do also supply to institutions directly. Our journey with Equity started from inception, because we knew that to have a very good product, you actually needed to partner with somebody who understands your business, with somebody, a stakeholder who will walk the baby steps with you from inception, and a stakeholder who will grow with you. And we found those qualities with Equity. And so Ajab and Equity started the baby steps, where when we started, we were just doing 750 tons. We were not the biggest wheat manufacturer. But within 48 months, that partnership has turned into fruition of being the biggest wheat miller in the country. And we are glad that we chose a good partner who will grow with us, and we continue to grow. Like bill stabilization. Bill stabilization has a very big advantages in that it cuts your costs insofar as letters of credit is concerned, and you move much faster with speed, and it's a trade finance instrument that actually facilitates international trade. And so by having a bank that has international correspondence and is able to actually access the dollars and facilitate your trade, allows you to be an international player. There's also retail financing, and this is being rolled over countrywide, where they don't have to struggle to stock their shops, resting assured that Equity pays us immediately and then the customers pay Equity later on.
Initially, they started at a capacity of 750 metric tons per day. And within 2 years, we had increased our capacity to 2,250 for wheat and another 400 for maize. We also have pay with equity with their retailers and their distributors. So we can say that they consume almost all our products, and their top management also bank with us. Credit cards, the company credit cards, they're operating throughout the country. They're not just in Mombasa, and they are big in terms of their muscle, even their capacity.
There was also asset financing, which is also a critical part. Mind you, to do a distribution, you need the products and the means to deliver that. And so you need a massive fleet. And you want a stakeholder where you're able to move with speed to the last mile. And Ajab found Equity to be that partner that can actually deliver that. We do source our wheat from international market, of course, plus locally when they're harvesting in the Narok and Eldoret areas. For the maize, Kenya is a maize deficit country, and we actually now are sourcing it from both Tanzania and Zambia. To the mamas, aflatoxin is a carcinogen, and Ajab is the only brand that actually has a toxin-safe thumbs up sign. As you think of your children, as you think of your family, think Ajab, because it's the brand that is easy to need, gives you more, and at the same time is safe.